Alright, everyone, get ready because today we're diving into the mind of one of the greatest investment legends of all time, Peter Lynch. If you think winning on Wall Street is only for the ultra-rich or financial geniuses, Lynch is here to prove you wrong. This guy didn't just change the investment game, he left us with lessons anyone can use to build wealth. So grab a seat, relax, and let's uncover the incredible story of this investment master. Who is Peter Lynch? Peter Lynch was born in Massachusetts and didn't exactly start out with the golden ticket to success. No silver spoon, no fancy connections. In fact, he worked as a caddy while studying at Boston College. But here's the twist of fate, one of the golfers he met was none other than the president of Fidelity Investments. Boom! That connection opened the door to a world Lynch would eventually dominate. After graduating and serving 2 years in the military, Lynch returned to Fidelity. They asked him to research boring industries like textiles and chemicals. But here's the thing, Lynch didn't miss a thing. His knack for spotting opportunities quickly got him promoted to Director of Research, and by 1977, he took over the Magellan Fund. What happened next was nothing short of legendary. The magic numbers of Peter Lynch. From 1977 to 1990, Peter Lynch turned the Fidelity Magellan Fund into an absolute powerhouse. He grew the fund from $18 million to over $14 billion. And here's the jaw-dropper, he delivered an average annual return of 29% during those years. This wasn't just beating the market, this was obliterating it. So, what made Lynch different? He didn't follow the herd. He zigged when Wall Street zagged. While everyone else chased the popular stocks, Lynch hunted for hidden gems, companies that were undervalued and overlooked. And guess what? That's how he discovered future giants like Apple, McDonald's, and Starbucks. Peter Lynch's key lessons. If you rethinking, well, he's a genius. I could never do that, think again. Lynch firmly believed that anyone can succeed in the market by following a few simple principles. Let's break them down. 1. Invest in what you know. This is pure gold. Lynch always said you don't need to be a financial expert to spot opportunities. In fact, the best ideas are often right in front of you. Work in the automotive industry? You might notice trends before anyone else. Are you a chef or in the restaurant business? You might spot the next big chain. Love a particular brand or product? That could be your next winning investment. For instance, Lynch discovered Dunkin' Donuts simply by observing that the stores were always packed. He realized customers loved the product. After some research, he bought shares, and those shares multiplied 10 times in value. Have patience and think long term. Here's one of Lynch's most important lessons: the market goes up and down. It always has, and it always will. If you panic during the lows, you'll lose. Did you know that while Lynch managed Magellan, the market had 9 major downturns? Many investors got scared, pulled their money out, and then jumped back in when prices were higher. Big mistake. Lynch put it bluntly, if you can't handle a 50% drop, you shouldn't be in stocks. Staying the course during market swings is what separates losers from millionaires. Look for simple businesses with great stories. According to Lynch, the best investments are often the simplest. You don't need to understand complex formulas or industries to find winners. In fact, if you can't explain what a company does and how it makes money in less than 5 minutes, you probably shouldn't invest in it. Take McDonald's, for example. Lynch saw that McDonald's wasn't just a restaurant, it was an empire of fast food with a proven business model. He bought shares and multiplied his investment 50 times. Another great example, Volvo. Lynch invested when the stock price was so low, he was basically paying only for the cash the company had in the bank. The entire business and brand were practically free. It was a low-risk, high-reward opportunity, and Lynch crushed it. The PEG ratio trick. Lynch created a simple formula to figure out if a stock was undervalued, the PEG ratio. You calculate it by dividing the price of the stock by its earnings, then dividing that by its growth rate. If the result is less than 1, the stock is cheap. For example, if a company is growing quickly but its stock price is still low, that's a golden opportunity. How Lynch turned a firefighter into a millionaire. This story is amazing. A firefighter in New England noticed that a local factory producing Tampax was growing fast. Following Lynch's advice, he invested $2,000 a year in the company. Over time, that investment turned into millions of dollars. How? By observing and having patience. Lynch always said, everyone has unique advantages for spotting opportunities. Why? You just need to pay attention. Warning sign, mistakes you should avoid. Lynch saw investors make 2 fatal mistakes over and over again. 1. Selling too soon. If a stock doubles and you sell out of fear, you might miss out on its real potential. If the company is solid, stick with it. 2. Letting emotions drive decisions. When the market drops, people panic and sell. When it rises, they rush to buy at higher prices. Don't do this. Stay calm and think long term. The legacy of Peter Lynch. In 1990, Peter Lynch stepped down from managing Magellan to spend more time with his family. But his impact on the investment world remains monumental. He wrote several books, like One Up on Wall Street, where he explains how anyone can succeed in the stock market. Today, he focuses on philanthropy but still shares his insights in interviews. Final takeaway. Peter Lynch's message is clear: you too can win in the stock market. You don't need to be a genius or have a fortune to start. What you need is observation, patience, and common sense. So the next time you see a product or company you love, take a closer look. It might just be your next big win. If this content inspired you, don't forget to subscribe, hit that like button, and ring the bell, so you don't miss out on our next video. Let's keep learning and growing together. See you in the next one.